The domino effect shows us how the fall of a small domino pushes all the others. Everything fits together, everything is connected, a small failure quickly spreads to the rest. Today we are going to talk about prices, spiraling and soaring. Let's focus on the price of energy that has shaken countries in much of Europe. Today we will see what rises can accompany energy, what else can happen and what days are ahead. So hit the like button and subscribe to the channel if you don't want to miss economic, financial and investment news. We start with one of those domino effects I was talking about in the introduction, and we move to the UK. And what has happened in the UK? The rise in the price of natural gas has caused CF Industries, a fertilizer producer, to close 2 of its plants. Let's remember that this company is dedicated to the production of fertilizers on which the food industry and the frozen food industry depend, since they use carbon dioxide for their cold chain. In other words, when this company closed down, the entire food production and distribution chain was in danger. The government rescued this company and rescued it so that it could continue with its operations with its production of fertilizers and carbon dioxide. But this shows us one thing, it shows us that inflation is dangerous. It shows us that inflation is not as transitory as we were told until just a few days ago. Chicken production has also been affected, it has fallen by 10% in the UK, and Christmas turkey production is expected to fall by 20%. Slaughterhouses are using carbon dioxide from gas, and the rise has fed through to the price of chicken. We have tremendous increases in the price of energy across the European continent. The price per megawatt has tripled from the levels of 2 years ago, and winter is approaching, and with it, the growth in demand for gas. Asia is paying more for this gas than Europe is paying, which runs the risk of running out of reserves, which runs the risk of experiencing a winter with blackouts and not enough gas. This leads us to ask ourselves a few questions such as: how high will prices go? Will this difficult energy situation reopen the debate on nuclear power? Will the wind blow again and will the cost of energy be reduced? I want to know your opinion in the comments. Meanwhile, we have the developing story of the collapse of Evergrande. What is going on with this company? They want to preserve cash, so they are offering investors the chance to buy apartments, local houses and parking spaces at a discount. For now it seems that they are going to let the bonds of foreign creditors go and pay the domestic ones. The authorities are preparing for a controlled blow-up of the company, and we will see how this affects the Chinese economy, where 75% of the population's savings are placed in housing in a huge bubble. A real estate bubble of almost $60 trillion. There is also the tapering agenda and the agenda of that interest rate hike, that hike that is expected between 2022 and 2023, and that stimulus withdrawal that is tentatively expected in November. The Fed intends to start tapering in November, and there is speculation that in 2022 or 2023 they are going to start the rate hikes. That is the version we have on the table at the moment. But a stock market crash could cause a turnaround in the Federal Reserve's agenda. In fact, there are many skeptics that tapering will finally happen. There are many who think that the economic situation will not allow for this stimulus withdrawal, and the Fed will reverse its intention to do so. In the meantime, it is said that 70 central banks around the world, many of them in the so-called emerging countries, are planning to raise rates in 2022. And the Fed has to take it easy, it has to act with extreme caution, because it is between a rock and a hard place. If they raise rates, there could be a chain of bankruptcies and a probable fall in the stock market. If they maintain them, inflation will go up. It is also possible that a very timid rate hike will not be able to reverse inflation, that it will not be able to curb inflation. And we are going to return to gas and fossil fuels. These fuels have been underinvested for years, with projects delayed due to the uncertainty in the sector created by climate objectives. On the one hand, our civilization cannot do without fossil fuels at the present time, and on the other hand, plans for their abandonment in the future are being accelerated, and this contradiction is reflected in the statements of the International Energy Agency. When they say that by 2050 we must reduce our dependence on oil by 80%, but on the other hand they call for an increase in production by 2022. Please hit the like button and subscribe to this channel if you are liking the video. Let's go with the second part of the video, and we are going to talk about oil. It doesn't look like the production of black gold is going to increase very fast, and it's still uncertainty in the sector, still uncertainty in the middle of this energy transition agenda. It seems that oil companies do not want to rush to invest, they do not want to rush to increase production because of what might happen in the future. Chevron comments that shareholders have not yet shown signs that they want to increase investments and have decided to keep their capital expenditure low for the long term. Meanwhile, the US has asked OPEC nations to increase their production. This has been going on for a few weeks now, and China has released barrels of oil from its strategic reserve. When China released these barrels, oil took a dip on the day, but quickly recovered again. It does not look like it will have a big influence on the price in the medium term. This strategic reserve, according to 2017 data, is 238 million barrels of oil in reserve, and well, it seems that neither China nor the US are interested in the price of a barrel exceeding $75. We have an interesting scenario as companies are afraid of the energy transition scenario, the energy transition agenda. We have a situation in which the price of the barrel has gone up, but share prices have had quite discrete movements. And we are seeing how all the pieces are coming together. We are seeing how the gears of the crisis are in full operation. We have gas shortages, what we had until a few days ago in terms of fertilizer in some places like the UK, chicken shortages, shortages of containers of building materials for housing, of freight and more things. And we come back slightly to the issue of Evergrande, that Chinese colossus in full fall. Evergrande's crisis has caused a fall in iron ore futures, a fall from which they have recovered briefly after the company's restructuring plan. However, in China there are already fewer houses being sold, less land is being sold, and there has been a drop in sales, and Evergrande's risks are spreading to other companies in the sector. You have more on the Chinese real estate crisis in this video above. Well, let's comment briefly on the 3 phases of stagflation that will recur in the coming years, 3 phases of stagflation identified by the Bank of America in the style of what happened in the 60s and 70s. In today's video I will not go into this topic in depth, we will deal with it in more detail in another video. But now we would be immersed in the so-called Phase 1, awaiting the start of Phase 2. Phase 1 is characterized by an onset of inflation, coupled with good stock market performance, and when we get to Phase 2, what we will see is stagflation, with a big rise in commodities. Already seeing some commodities going up strongly. We see how the coal that China is demanding is going up, we see how the world is still depending on burning coal. We see how natural gas has the reserves at minimums in Europe, we see how natural gas is being bought greedily by Asia, we see how aluminum is at record highs, we see highs already in some commodities. And we continue with energy and well, as I have already mentioned before, the Asian continent is supplying itself with gas because of the fear of a possible shortage in the winter months, and in this way Asia is paying more than Europe to get hold of gas. And we return briefly to the event of these days where we are watching what happens with Evergrande. China is being more prudent than Western governments when it comes to rescuing large companies in distress. It is trying to demolish in a controlled way this company, this giant. Conduct a crash that doesn't cause excessive damage. And it seems that we are approaching the endgame, it seems that the crisis is coming upon us, it seems that the world is in for stormy days, days of cycles, the world is cyclical, life is cyclical, and nothing lasts forever. Tranquility does not last forever, and chaos does not last forever either. Now we are heading towards days of chaos, towards days of turbulence. But that period will pass as it has passed other times in history, although it is clear that it will hurt as long as it is around.